India's really kind of taken off post-COVID. So the last 20 years, there's been a lot of hope about India, but it's always struggled to really deliver and fulfill expectations. I think the changes that Modi made early on, the demonetization process, bringing all the money into the banks, a lot of bankruptcy reform and other financial reforms, a lot of investment in power infrastructure. So India hasn't really suffered from blackouts and brownouts since 2019. A lot of investment in roads, ports, etc. So the country's got the infrastructure, it's got a better functioning financial system, and also digitization has really streamlined government approvals processes and all that kind of stuff to speed up activity.
Hello, I'm here with the Assay. We're here at the One-to-One Mining and Energy Investment Singapore event, and we have Ian Roper, commodity strategist for Astris Advisory Japan, joining us today. So Ian, thanks for joining me.
Thanks for having me, Amy.
So maybe we could start with a bit of background into you and your work within the metals and mining industry.
Sure, yeah. So I work with Astris Advisory in Japan. I'm a commodity strategist. I've been a commodity strategist or analyst for about 20 years now, always in Asia. I was in China from 2003 to 14, Singapore since then, and Japan since COVID. So yeah, I analyze the commodity markets, looking at the bulks, the base metals and new energy materials, but looking at them on a global basis, even though I'm based in Japan and Asia.
All right. So, I mean, historically, the big story in metals has been about China and how they've been kind of driving demand within the metals industry. What have you seen coming out of China post-pandemic?
Yeah, so post-pandemic, the initial couple of years, we saw a strong rebound in China. There was obviously a lot of stimulus to offset the economic weakness of the pandemic, and that kind of carried through 22 into 23. But this year, you've seen quite a drop-off in activity in China. Obviously, the troubles in the housing market quite well documented. I mean, volumes, sales are down heavily there since kind of 2020 when they finished the social housing program. And on the private market, they've said, look, we basically built too many apartments now. I think the stats, China's actually built more than one apartment for every urban family since 1999. So it's about better utilizing what they've got rather than building more new ones. The other factor, you've had a big clampdown on local government debts and therefore infrastructure investment. Right. So infrastructure activity really struggling this year. Cement demand's running down about 11%. That's why steel demand is suffering so much, running down about 5% for this year. So yeah, China's struggling in terms of what we call the old economy. But actually, there's still some good news stories in China as well. The new economy, things like EVs, renewable energy, technology, that's still growing extremely quickly in China. So EV sales are up about 30% this year. And you see China's power consumption is up over 5%. In the old days, we used to look at China's power consumption rather than GDP numbers. Whereas actually they're showing that the economy is still quite strong. So there's a real split there between what I call the old economy. That's really hurting things like steel demand and therefore iron ore, versus the new economy, which is a lot more base metals intensive and obviously battery materials and all those kind of things.
Okay, interesting. And I know you're quite keen on India's growth story now. So what's happening there in terms of demand, and why should the industry be taking notice?
Yeah, so India's really kind of taken off post-COVID. So for the last 20 years, there's been a lot of hope about India, but it's always struggled to really deliver and fulfill expectations. I think the changes that Modi made early on with the demonetization process, bringing all the money into the banks, a lot of bankruptcy reform and other financial reforms, a lot of investment in power infrastructure. So India hasn't really suffered from blackouts and brownouts since 2019. A lot of investment in roads, ports, etc. So the country's got the infrastructure, it's got a better functioning financial system. And also digitization has really streamlined government approvals processes and all that kind of stuff to speed up activity. So now, three main drivers, I'd say, of growth in India. Number one, government investment. So massive investment in roads, ports, now the railways. They want to electrify all the railways. They're building a Japanese bullet train network, partially funded by Japan. So that's the infrastructure side of things, lots of government investment. Also building 20 million social housing projects. They're installing solar panels on people's roofs. One of the things Modi said in the election is the idea of getting free power for the people in the rural areas. So I've started to install solar panels for free. India's got massive investment plans on renewable energy, going from 166 gigawatts last year to over 500 gigawatts by the end of the decade. And then you've also got the FDI side of things, where Modi's been running around the world trying to encourage more investment. They've got this Made in India program. So at the moment, I think India consumes about 4% of global goods, but only manufactures 2%, whereas now you're starting to see more and more factories moving to India. So again, that'll help boost the commodities consumption on both constructing the factories and then operating and manufacturing the goods.
Sounds great. And I mean, maybe you can talk a little bit about some of those key commodities of note that are going to be part of this Indian demand story.
Yeah, so obviously kind of key question boils down to geology. So like in China's boom, the key thing China really didn't have was hematite iron ore. So that's why iron ore, 85% reliance on imports and drove the pricing boom there. The story for India is India has an abundance of iron ore, but it has next to no met coal. So met coal will be to India what iron ore was to China. So India's building about 80 million tons of blast furnaces. They've only got 80 million tons of operating furnaces at the moment. So their met coal demand could double over the next decade. India's already the biggest buyer of seaborne met coal. Another one, geologically, India doesn't have much of is copper. So that stands to benefit. Again, they'll have to import a lot of copper. But across the board, really, aluminium, the growth rates in commodities consumption, India are running more like 15% a year. So I think there'll be increasing imports of a lot of the commodities. But yeah, copper and met coal, the two standouts there.
All right, sounds good. And then finally, what sort of trends should we be looking out for in the short term?
So short term, commodities have had quite a volatile year. We saw very high prices in May, copper hitting record highs. A lot of that was kind of AI derivative money coming in and a bit of overexcitement perhaps on that angle. Whereas now commodities are back down again, and there's a lot of pessimism about global growth, Western world growth. Stronger dollar again has been hurting recently. So yeah, nearer term, it's about Western world macro, kind of US and Europe finally shrug off the recessionary worries and see a bit of recovery next year or something. That would certainly help. But otherwise, it's China pessimism. But my view now is China is through the worst. Right, it's been terribly weak this year. Steel demand down 5%, but I don't think next year we see another double-digit decline in construction. So I think it starts to kind of bottom out there. And China's sentiment's terrible, and equally, I don't think that should get worse. So China sequentially, certainly seasonally for 4Q, you generally see a bit of an improvement into year end. And of course, India has had one of the longest, wettest monsoon seasons in 100 years. So activity's been very suppressed in recent months, but India's coming out of monsoon season now. So commodities have always had this interesting kind of trade, sell in May, buy in September as a general seasonal trade, and that entirely matches the Indian monsoon season. So as India becomes increasingly significant on the demand side, could we actually see a bit more seasonality within commodity prices going forward?
All right, sounds great. Well, those were all the questions I had for you today, Ian. So thanks for joining us here in Singapore.
Oh, thanks, Amy.